Hi, I'm John Smith.
Hi, and I'm Elliot Foster.
Welcome to the 25th Annual Emerald Groundhog Day Investment Forum.
And the passion is still there. It's still there every day when our research analysts are looking at a new name. And the passion is there very much in the portfolio management team to keep the record going and keep providing alpha for our clients.
Perspective as a small cap fundamental bottom-up manager, we're focused on finding the innovators, consolidators, and market share gainers, and I think we have a whole list of them. The opportunity set there is not narrowing, if anything, it's broadening.
We are particularly enthusiastic entering 2018 for relative performance of small cap as compared to what we saw in 2017. Certainly was a good year in aggregate, but small capitalization earnings growth we believe is really poised to accelerate. Coming out of the earnings recession in 2017, large caps really outpaced that of small from an earnings perspective, with small caps only posting, about a mid-single digit increase. We expect that to accelerate meaningfully in 2018. We're looking for earnings to end up somewhere in the double-digit positive range for the full year, and we think that will have a benefit to stock prices, especially when you consider the fact that small caps are trading in a reasonable range relative to a large, and especially when you look at the absolute multiple relative to the earnings growth in 2018, we believe small caps are particularly well positioned. Yeah, we believe the effect is going to be twofold. We're seeing large corporations come out and with the benefit from the tax, they're redeploying that into their employee base. We're seeing that in the form of minimum wage increases. Walmart in particular was raising minimum wages from $10 to $11. I think KeyBank came out and announced that they'd be raising minimum wage to $15. Other corporations have announced benefits enhancement packages as well as one-time bonuses, all of which we think is going to be or have a favorable benefit to disposable personal income. On top of that, from the consumer perspective, we're also looking at the tax cuts starting to flow into paychecks effective here in February, which we think is also going to be a benefit to disposable personal income. So collectively, as you're looking at these two factors come together, we expect to see disposable personal income start to inflect more meaningfully positive as we move through 2018. Yeah, as we sit here today, based on our outlook for an improvement in disposable personal income, what we see is a very favorable backdrop for accelerating household net worth being driven by rising housing prices and certainly an improving stock market. We believe the consumer is really well positioned. I should also mention that as we look at debt service as a percentage of disposable personal income, it still remains at historic lows, which we believe positions the consumer well moving forward. So we're fairly positive here in the medium term and would be expecting an acceleration, the acceleration in consumer spending that we really saw start during the holiday season to continue at least through the mid to back half of 2018.
Awesome. Thank you, Stacey.